Good morning, good afternoon. Today is Monday. This is the Daily Scan, midday report for the 22nd of September. We've passed now options expiration. We've passed all of the main catalysts. The only one coming up next is the jobs number, which is on the 3rd, a week from Friday. So let's take a look at what's happening. The second half of September historically has been the worst half of the worst month. But that has not been the case for September this year. So this is the outlier year. It's not following the average. We'll see what the second half brings us. We'll take a look today. As always, I'm not a financial advisor, so this is for educational purposes only. Let's go take a look at the charts. I've changed these a little bit for subscribers. You might have noticed if you come down here on the left-hand column, under the 10-minute charts, I've added a second one or another third one here. Let's start with the aggressive sectors. First off, the S&P, you see, had a gap down in the morning. So it looked like it was following along with that September trend, but now it's heading higher. So that didn't last long. The buy the dipper stepped in and said, man, it's got to be a good place to buy, even though it's higher than all these previous lows. But that's what happened. They bought. Money flow was up, but it's still negative. Money flow is still negative. So watch out for that. So what I did was I added one more of these. So I've got three of them now. One is the aggressive sectors. I'll show you how they're organized now. Three aggressive sectors. Technology, definitely moving higher. Discretionaries, let's call it flat. Communications is moving down a little bit. So technology, once again, is carrying the day. The next one is the defensive, and this time there are only three in this one. These are the main defensive sectors as well. So again, the market continues to go higher. Staples is down, utilities is down, real estate is down. These are the main defensive sectors. So clearly technology is carrying the market, and the rotation is into technology and out of defensive. So the next one is the cyclical sectors. These are the rest of the sectors. Rather than trying to group them in with aggressive or defensive, I decided to put them all separately as cyclical. So that means they can move either way, depending on what the market is doing. In this case, financials down slightly, healthcare flat, industrials down, materials down a little bit. Energy is the big loser from back last Wednesday, continuing to go lower. So that's what those looks like. The next one is the rotation. I changed this a little bit too. So for rotation, you can see this is the S&P again, growth versus value. Discretionary is up, technology is up, semiconductors are up. So that all of the growth, high moving technology areas is what's carrying the market higher. And the last one down here is transports versus industrials. So this is a classic Dow theory that if the industrials are going higher, which they have been, then transport should go higher as well, but they haven't been. In fact, they're actually going down. We can see that over here. Now, you don't need a subscription for this. So back here on the home page, you can just click on this new Dow theory right here. You can see this explains the Dow theory, the old Dow theory. This is as of Friday. You can see industrials or the Dow is heading higher, but transportation is heading lower. So the theory is that if the people that make the products, industrials, are doing well, then the people that ship the product should also be doing well. And in a strong, healthy market, that's the case. But in this particular case, it's not. So this is a divergence. This often will happen before a downtrend begins, but it doesn't tell you when that might happen. Now, I included three others, which is basically the new Dow theory, let's call it. And this is the S&P versus the NASDAQ equal weighted, the NASDAQ 100 with semiconductors and communications. And you do need a subscription for this, but I'll show you what this looks like. So this is the S&P cap weighted versus equal weighted. So cap weighted on the left, which are all the big names that have been driving the market higher, versus equal weighted, which basically ranks everybody exactly the same in the S&P 500. So this one weights those top 7 or 8 or 10 stocks, and this one makes them all equal. You can see the equal weighted is lagging. Same thing down here with the Qs. This is the NASDAQ 100, and this is the equal weighted on the right-hand side. Again, NASDAQ 100 definitely going higher. The Qs basically are just now getting back to their highs. So not really confirming or basically validating that it's just a few big names that are driving the market higher. NASDAQ versus semiconductors, both of those look pretty much the same as they should. And communications versus the internet group also look pretty much the same as they should. So that's what those are all about. So you can always look at the transportation. I added it here to this daily. This is a 10-minute chart, so you can see just today what's happening. The next one is growth versus value of, actually, I changed this a little bit too. This is the Russell 2000. So small and mid caps, you can see a gap down right there, just like the rest of the market. It's moving back up as well, but not quite as strongly. Money flow is still negative up here. And then what I did was I'm comparing it to the S&P, first of all, how if you're putting your money in the Russell versus the S&P, which one would do better? Right now, they're pretty much equal. And then I compare the mid caps versus the S&P large caps, that's heading down, and small caps versus S&P large caps. So this basically means that S&P large caps are outperforming. So your money would do better in the large caps right now instead of small. This is just for today, of course. This is a 10-minute chart. And then finally, on the NASDAQ 100, I added the percent of stocks above their 20-day and 50-day down here. So you can see the NASDAQ moving up as well, although advancers minus decliners is not too impressive, and up volume minus down volume, while positive, also is making lower highs. So that should be a little concerning. The VIX is pretty much flat, but this is the percentage of stocks above their 20 and 50-day moving averages down here. So you can see Friday, those had a nice run higher, but today they are starting to move lower. All right, let's take a look at the dashboard real quick. The Dow up a little bit, S&P after being down up a little bit. This is basically what I showed you before. There's the NASDAQ 100, VIX moving up slightly, but still below 17. So still bullish for sure. Bonds, 10-year went down, came up, went down, came up. Doesn't know what it wants to do today. And 20 years down for sure, with the dollar down as well. Commodities, gold has been the big winner for quite a while. Gold is up, silver is up, oil is down a little bit. And then for crypto, Bitcoin is down quite a bit, actually, 2,500 points, down to 112, but Ethereum is actually down much more, down 6% versus 2% for Bitcoin. So Ethereum is the one that's really moving lower. All right, let's take a look at the sectors. As I mentioned, technology is at the top and healthcare is next, discretionary. So 2 of the 3 aggressives are at the top, but you can see 2 of the 3 defensives are right here near the top in the upper part of the range. At the bottom is Staples, which is the other defensive stock or sector. Coming up is Micron earnings will be tomorrow after the close. And we also have Costco after the close on Thursday. So those are the 2 key ones. And for industry groups, we've got technology, discretionary, industrials, technology, discretionary, materials, discretionary, materials. So mostly it's technology, of course, and discretionary. Both are doing pretty well. So these are the top 10 combined lists. This is updated every weekend. So some of these might be new. So this one here is making a significant run higher. Started off last week. APLD has been on the list before. That one's up quite a bit. IREN is the only one that made all 3 lists. Let me actually show you the top 10 lists that get updated every weekend. So this is the charts page. You can see right here, the ones that are in green means it's on all 3 lists. So this is the top 10 relative performers. These are outperforming their industry group by 10% or more and the S&P by 7% or more. The one in the middle is the top 10 stocks that have made 52-week highs and are under $50. So this one here, Zepp Health, actually dropped off last week because it went over 50. This week it pulled back, so it's back on the list again. It's number 1 on the list, in fact. You can see if they're highlighted, that means they're in more than one column. If it's green, it's in all three columns. So IREN is certainly the very strong stock. And then down here are the top 10 large cap, mid cap, and small caps. These are updated every week. They're available to subscribers. You can see these. I'll show it once in a while on the channel, but not very often. Anything that has an asterisk is brand new for the week. And anything that is in red means that it is also in the top 3 for the week of its own sector. So you can see IREN up here just made it to the top 3 of its sector, which is technology. But anything in red right here is not only the top 3 in its sector, but also in one of the top 10 lists. So Lightbridge, for instance, has an asterisk, so it's brand new in its sector, and it's brand new in the under 50 group. So for those that are looking for low price stocks to get into, this is a great top 10 list right here to follow. I put all these together in a CSV file right here. So if you want to download these top 10 lists, you can do it right there, that CSV file. All right, let's get back to where we were on the dashboard. Solar Edge is up there. NBIS in the top 10 lists. Nectar made the top 10 list this week. Go 2 down, there's ZEP. Look at that run. It pulled back and now it's moving higher. IMRX was in the top 10. Oracle, of course, had a pullback, did not close the gap. Now it's starting to move up. And Rocket Lab is the second group down, just making a move. We'll might look at that in a second on the scan. Qubits, Open is in the bottom. Qubits is in the bottom. So that's a quantum stock, which did great Thursday and Friday last week. There's another quantum stock up here. Credo pulling back right now. Affirm pulling back a little bit. Joby pulling back slightly. Upstart pulling back. So that's what the bottom 10. So this is a really great list. Even the ones that are at the bottom, down 5%. Even the ones that are at the bottom are pulling back after a big run higher. So might be a good time to get into some of these. All right. Next, let's take a look at the market carpet, see what's going on today. As you can see, lots of red in the big 10, other than Apple and Oracle. Both of those are doing really well. Palantir's pulling back and Tesla's doing really well. But Google, Meta, Microsoft, NVIDIA pulling back slightly. Broadcom, Palantir down almost 1.5%. The top stocks are over here. Teradyne, this is just for the day, just for one day. Enphase, Apple moving up, Oracle moving up, Tesla. So there's 3 of the big ones right there. So that's what that looks like for the day. Now let's go take a look first at the short squeeze, see if there's one. There is one for the day. This is today's short squeeze. This is QMCO, which actually was on the list on Friday as well. So it's actually moving up, has a black candle now, which means it gapped higher and then is selling off. But it's higher than the close yesterday. So earlier today, when it was way down here, it would have been red. But now that because it is now above Friday's close, that makes it black. So black candles sometimes can be good. That just means normal profit taking from this big run higher. If it keeps going down, that's not good. But if it makes a black candle, that could mean the next day it's going to start to move up again. If we look back a little further back, you can see right back here is where shorts are going to feel a lot of pain, around 14. So we're at 1223 right now. So again, that one was on the short squeeze list last week as well. All right, let's now take a look at the scans. So as I said last week, I'm only going to do one scan, and it is this bullish scan right here. And then I'll look at some stock requests. So these are all the ones. These will be above their 21-day by default. So green bar and above the 21. That's what I'm looking for. I would like to see the momentum starting to move up from underneath 1. So this one had a nice run higher. It's consolidating sideways. AMD's on the list. So AMD is starting to move higher. I actually sold a put on this. What that means is I sold a put at 150 So that means as long as it stays above 150, then I just keep the premium, kind of like an insurance company. As long as your house doesn't burn down, they keep the premium and you pay them again next year. That's kind of how this works. So I sold a put right here at 150. As long as AMD stays above 150, then I actually did it twice. One is for October. As long as it stays above 150 into October, the other one is just for next Friday. Didn't make as much premium on that one, but has a much higher likelihood to actually staying up there. And the reason for that is because of this scan. The scan is looking for stocks that have pulled back, starting to move higher again. Strong stocks, they've been in the strong stocks list and now moving higher. And you can use this just to buy the stock if you want to as well. So sitting there right at 161. Duolingo is on the list. Of course, some gold, including the gold ETF. GLD, gold continues just to scream higher. GameStop, interestingly, is on here. GameStop, another meme stock. Is it making a comeback? Looks like it. Up 4.5% today. HCA, healthcare, Oracle. Oracle's on the list as well. Rocket Lab. This is another one that looks like it might be ready to break out. It's in a sideways channel, so it needs to get up above about 54. Tempest, Nancy Pelosi's favorite stock. Take-Two Interactive is on here. And Verona Pharmaceutical. Oh, that looks like a acquisition. So that one I should take out of the list. Anytime you see something like that, where it just goes sideways like that, that usually means it's been acquired, but the acquisition hasn't closed yet, so it still has a symbol. That's pretty clear. That's an acquisition. So ignore that one. Valero Energy, though, just had a really nice, beautiful run. Looks like it might be starting a run again. But notice how the momentum bars are way up here. So I like it to be down here, more like this right here. So when it went above the 21 right here, it would have hit the list. Valero Energy right there, and that's what I like. When it's below zero and momentum is just starting to move higher, that is a great entry point right there. This could be too. I mean, it could continue to go higher, but this is the ideal one back here. All right, let's take a look at some stocks that folks asked about. First is United Healthcare. United Healthcare, which bottomed out way back here at 236 and has had a nice run higher. Here's a gap up when Warren Buffett reported that he's in it. So it went up, moved sideways, moving up again. Right now it's still above the 21, moving up today. So still looks really good. If you wanted to get into this, of course, that 21 is a good place to do it, but it doesn't look like it's coming back to the 21 anymore. So right now might be a good place to take a position in UNH. If you're not in it already. If you are in it, then just ignore all of this. This is all just noise. Back here would have been the perfect opportunity. Here's day one. Here's the day one entry. Above the 21 right here at close then at 270. And today the close is 340. So 70 points in that run right there. So United Healthcare still looks strong. Relative strength is still strong, still up there. Nice candle today. Volume's a little light, but we'll see what happens by the end. So yeah, this still looks really good for United Healthcare. Let's see, CAG, ConAgra. ConAgra is definitely in a downtrend. If we look at it in a longer term, huge downtrend, continues to go down, tries to make it above the 50, keeps getting rejected. Now this might be this is a little different way of investing. So these kind of stocks are for value-oriented investors. And I looked at two of those last week. If you are a value-oriented investor, then you're trying to pick the bottom. So the support level for this is at about 18 right now, currently trading at 1842. So you could either A, buy it here, and then if it goes, buy a part of your position here, and then if it goes down further, buy some more. That's that's one way to do it. Another way to do it is to wait to see if it bounces off of this area. So it may come back down to 18 and then start to move higher. So that's another way you could play it. A more safer, let's call it, safer way is waiting for it to get above the 21. But of course, for a value investor, you're trying to figure out where the bottom is. So buying just a little bit, and then if it goes down more, you buy some more. But it could keep going. It could just continue to go down. Here's the monthly, or actually a weekly chart. You can see it just continues to try to recover and just continues to roll over and go down. Now, Conagra is a big company. It's not going to go out of business. So this is one that, for value investors, this might be a good place right down here around 18. Another way you can do this, and this is an option play. So if you are qualified to trade options, you can do just what I talked about with AMD. You could sell a put. So in this case, let's say you wanted to get it at 18. Right now it's at 18.40. Let's say you wanted to get it at 18. So we'll look at the options for, well, we could look at this week, but let's look 1 week out. And whenever you're selling an option, by the way, on the options page on the website, it explains all of this right here, this little chart right here. Whenever you are selling an option, you want to be 30 to 45 days because your decay will occur very quickly, which means you keep the premium. If you are a buyer, you want to go out here to 60, at least 60, but 90 days or more, because the decay happens very slowly out here if you're a buyer. If you're a seller, you want it to happen fast. If you're a buyer, you want it to happen slow. Just remember that. So we're talking about selling a put. So let's say we wanted to get in at around 18. So we sell a put for $18 and expiring on the 3rd. So that would be basically 30 cents. So you'd make 30 cents. So if on the 3rd it's trading below $18, then you will be put the stock, but you will have bought it at 17.70. So that's just for next Friday. So instead of trying to get it, remember it's 18.40 right now. So you get it for 17.70. If it stays above 18, then you just keep the 30 cents. And if it's 30 cents times 100 shares, so that's $30. Not a lot of money, but it's a way to get in. It's a way to get into a stock that you want to own at a lower price. So in this case, and if it doesn't get below 18, then you just do it again. You just move 1 week out, you do it again, make some premium, keep making premium until you finally own the stock, and you're owning it as a value investor. You're owning it way down near the bottom. All right. So let's go back here and look at the next one. It's from the same person. So this is Procter & Gamble. Procter & Gamble does not look nearly as bad, although still in a downtrend. It's above the 200-day, which is good, but it's still moving down. It's moving down this week. Let's look at it today. It's moving down today again. So again, in this case, support is down here at about 150. It's currently at 154. So let's take a look at this one. Look at the option chain for October 3rd on this. And you can see 150 is 49 cents. So you make 50 cents. If you sell the put, you make 50 cents, well, 49. 50 cents goes into your account immediately. And if it does trade below 150 by next Friday, October the 3rd, then you will be buying it for 149.50. So if you're willing to buy it right now at 154, then you could wait and make 50 cents, or you could sell the put for 155. So let's say you're willing to buy it at 154, 154.32, then do one even closer in the money. You could do 152.50, for $1. That means you pick it up for 151. Or you could do 155. You make $2. It means you pick it up for 153. So the 152.50 looks like a pretty good deal if it trades below 152.50, which is going down right now, remember. So if it goes down to 152.50, which is right about here, then you will own it for 150. So that's just another way to play these kind of value names. But this one also looks like it is in a downtrend. 150 looks like support level. So if you want to wait till it gets there or close to there, let's say it goes down and starts to turn around before 150. Well, then it's putting in a higher low. That means that this could be the bottom right here. So you might want to watch it and just see when you get a new green bar and buy it on a green bar, or even a blue bar when it goes neutral. Buy it on the blue bar. So anyway, that's my opinion. Some options, different way of doing it for that one. All right, the last one is Peloton. Peloton looks like it is, let's look at it this way. It bottomed way back here at $4.66 roughly, started to move up, got above the moving averages, came back, put in a higher low, put in a higher high, another higher low, and now it looks like it's working its way back up to the top. Now, in this particular case, the person said they sold a put credit spread, which is basically the same idea, except that you're hedging your risk a little bit. They didn't say at what level, I don't think, what level they bought the credit spread, but put credit spread, let's say, for instance, move in a little bit. Let's say the put credit spread was for, well, let's look at this. Let's look at them right here. So right now, Peloton selling for $8.19. On Friday, it closed at $8.27. So put credit spread probably force, and they didn't say how far out they went, I don't think, but let's say it's to October. Let's say it's the October options expiration. So $8 for Peloton, you would make 60 cents. So that means if it trades below 8 by October 17th, you'll pick it up for $7.40. $7.40 is right about there, right near support. So $7.40 is where you would buy it. You'd be buying it pretty much right at support and right about at the 50-day moving average. So that's probably pretty good. You'd make 60 cents depending on how many shares you bought. So one contract be $60. 1,000 contracts times 60 cents make $600. So let's say you do 1,000 contracts, you make $600 between now and October 17th. If it does not trade below 8, if it continues to go up, you just keep the premium. But if it does come down below 8, then you're buying it for $7.40. So not a bad strategy. However, and this looks like it's pretty much consolidating. So this is one where that put credit spread, I might actually do just a naked put without the spread, because it looks like it is moving higher. It's not one that made my list, however. So I like to do it on the ones that make my my scan list for the day. Let's see, like AMD did. And another one that made the list earlier today, but is pulling back right now. So a lot of times it's good to take a look at this near the end of the day, was eBay. Let's look at eBay. So it was on the list earlier, but came back off the list now near the end of the day. So it did have a green bar above the 21, but it pulled back below the 21 right now. But still, it looks like it's in a consolidation. Looks like it made a little bit of a higher low. So we'll see if it can stay in between that 1x ATR, between these two green lines right here. That would still be positive. So it might still move higher as a result of that. And you can see the momentum starting to move up. In fact, let me look at it over here. Let's look at eBay here. So momentum starting to move higher, not in a squeeze, but it's kind of in squeeze territory. So it could end up starting into a squeeze. It actually is on the higher level, the squeeze that you pay for, which I have on my other screen over here. It actually is in a squeeze, but momentum is starting to move up. And if these lines cross right here, so this could be a little early right now, but I actually like getting in a little bit early as long as it stays between these two green lines right here, between the 1x ATR, then I'm okay sticking with it. And it's just above the 50-day over here. And you can see the momentum is starting to move up. So this is the time when volatility will be low, which is a good place to buy. You can also see the force indicator down here just moving above 0 too. So low volatility is a good time to get in. If it starts to really move, then the volatility will go up and you actually can get out early on this particular one. Anyway, that's it for today. I think that's everything I wanted to cover. So thanks for watching. Let me know if you have any questions, comments, anything you want me to check into. Be happy to do that. And I will talk to you again tomorrow. Let's take a look real quick before I leave. Let's see what see what the S&P is doing. There's Russell 2000 starting to head lower. It's got a red bar now. S&P pulling back a little bit, but not significantly. Growth versus value, all the main indicators are still bullish. We'll see how this plays out to the end of the week. This could be a bearish week, could be a pullback week. So there's those are the cyclical stocks. Here are the defensives, still going down. Staples continuing to head lower, and aggressive stocks, technology continuing to go up. The other two aren't looking that great. So technology, again, is the one that's carrying the market today. But pulling back a little bit, but not significantly. Still looks okay. We'll see how it ends the day. Thanks for watching. Let me know if you have any questions. Please like and subscribe. Give me a comment. I really appreciate it. And I will talk to you later. Take care.